Welcome back. We are now hearing and also seeing Wall Street and the billionaire titans are now doubling down on Bitcoin. But as we're going to be exploring in today's video, this double down may not mean that we're at the bottom of the market. We're going to be looking at charts. We're going to be looking at the Bitcoin and gold charts and more. We're also going to be discussing the stable coin situation because this is part of Wall Street taking over. Everybody's focused on, well, Bitcoin and Ethereum and all these altcoins. Meanwhile, Wall Street is literally setting up right in front of our eyes, and it is in stable coins. We're also going to be discussing a lot of other topics, including the Aave loss in the millions of dollars that is now attempting to be refunded. We're also going to be talking about the Ethereum mandate that Vitalik is now backing, that was basically released by the Ethereum Foundation, telling the community to step their game up. And we're going to be talking about the Bitcoin treasury companies and where we are in the cycle, because we are at a very critical point in the cycle, in my view. As you guys know, we are not yet at the capitulation point, meaning we're not at the bottom of the market just yet. But the further we go, the closer we are. And so in today's video, we're going to be exploring where the bottom of the market is, what are the signals that we're seeing in the market, and what is the market showing us? Because remember, we're trading the market in front of us, not the market that we want. Don't forget to give this video a free thumbs up, hit that subscribe button. That way you never miss a new video. Also, if you want to help support the channel financially, click the join button down below to learn more about channel membership. But other than that, let's get into today's video, and we're going to be starting right here because this is an indicator of how people's money is working for them or not as the market continues its downtrend. Now, as we've been talking about for quite a while, right, what's happening in Bitcoin is, in my view, an indicator of what's happening in the rest of the markets, right? There's a lot of uncertainty, a lot of geopolitical conflicts, a lot of questions about whether we have inflation, whether we don't, whether rates are going up, whether they're not, are we in a recession, are we not? Whether we are or not, to any of those questions, Bitcoin is definitely coming down. The AI bubble seems to also have popped. I mean, just on these other charts that I'm going to be showing you a little bit later in the video, if we just dial in to Iron, which is one of the Bitcoin mining companies that pivoted to AI, you can see the large drop up until October, November, which was the top of the Bitcoin market, effectively, potentially the top of the AI bubble. And also, you can see a very clear M pattern here, right? What is an M pattern? M pattern is opposite of a W pattern. A W pattern is a double bottom. An M pattern is a double top. Now, this was actually like a triple or quadruple top here. Obviously, the second top area was higher than the first top, but generally speaking, these were resistance lines. And then what we can see here is from really kind of the, I would say, the average of the top of the market until the next rally that we saw in January, that was the top, right? And so this is a confirmation, in my view, and I'm not a chartist. I use charts to help guide the thesis and confirm what we're seeing in the fundamentals of these companies or cryptos or whatever. But these charts are confirming the thesis that we have, right? You can see this was the top of the market, effectively the $60 range. Boom, top of the market in January. And so this potentially means that this next low right here, which was in the $30 range, is going to be the next kind of resistance level if we go below this, or it will be the support level if we stay above it. I mean, in my view, Iron is going much lower. The bulls think that it's going much higher because of AI, Microsoft, all this data center stuff. But at the end of the day, Iron just issued an SEC filing stating that they're going to sell up to $6 billion of new shares on the open market, which is literal just straight dilution in a downtrending market, in an AI bubble popping, in a downtrending economy, while Bitcoin and crypto are continuing to drop lower and energy prices are going higher. And they're issuing new shares. I mean, guys, the stock is going lower. But the bulls will say, no, Cryptoviser, they have a deal with Microsoft. Well, Jim Chanos said it looks like Robinhood customers lost almost 5% in February alone. The total platform assets dropped $10.2 billion in the month to $314 billion, but that includes a $5 billion in net deposits. So the implied loss of $15.8 billion was 4.9% of end of January total platform assets. The S&P was down only 0.9%. And so effectively what Jim Chanos is highlighting here is that based on Robinhood data from their filings or whatever, their financials, it shows that in February, right, from January to February, or I should say all of February, right, from end of January to end of February, Robinhood customers had a net loss, right, not from withdrawals and deposits. It was from net losses in trading the market. Now, the point that Jim Chanos is pointing here is the S&P 500, or the top 500 companies, performed down less than 1%, but Robinhood customers are down 5%. And so that's a 4%, that's basically 5 times the losses of S&P 500 during 1 month. And so this shows, number one, that they're probably in other type of investments. To me, it says that there's way more risk taking. And I'm glad that Jim Chanos was able to look at these financials and point this out, because this is the part of the cycle, guys, where I've been saying since the beginning of 2026 that we're going to start seeing people doubling down. People who've lost their money as the market has already dropped precipitously. Guys, Bitcoin is down from $126,000 down to $70,000. This is almost a 50% drop in just a few months. In my view, going much lower. But regardless if it's going lower than where we are or not, a lot of people lost a lot of money. And this is just Bitcoin. Think about all the derivatives. Think about all the stocks that have come down. I just showed you the IRIN chart. IRIN has also come down from $75 where people were buying. And this was in November. Then people were buying at the end of January. Look, people were buying on the way back up saying, oh yeah, see, the bottom of the market was there. Cryptoviser was an idiot. We're not at the bottom of the market. We're not in a bear market. We're in a bull market again. That was the bull trap. And there's going to be a lot more of these bull traps coming along to get the bulls excited, reinvigorated, thinking that the bull market's continuing, and then boom, another leg major down. And so this is highlighted on Robinhood's data of their customer funds that are on their platform. And this is very interesting because it confirms what we're saying. It confirms that if you're trading in these derivatives specifically, because people will, they'll lose, let's say, 10% of their investment in the spot crypto or stock. And so then they'll say, let me just go buy a call option on this stock. And they put their money in that. And then you have the time decay. You have the potential of massive volatility, and then as the price is going up, people get excited and they don't sell, and then boom, you get that major drop down, and then it wipes out all the derivative value that was in profit into significant losses, and then people just lose their money, and then they start tripling down and quadrupling down. And so this confirms what I said was going to occur at the beginning of the year, that people were going to be doubling, tripling, quadrupling down. Well, in fact, they're not just doubling down, they're 5xing their double downs or their bets. And again, we know this because the S&P is down 1% and Hood customers are down 5%. So they're down 5 times what the market is down. And this is the same thing to a lot of the Bitcoin and crypto maximalists out there. As they continue to say, Cryptoviser, you're an idiot. We're not at the bottom of the market. We're not in a bear market. We're not rotating. The bull market's not over. It's never going to end. They look at the M2 money supply and they just keep going on and on and on. They're losing value in their portfolios. It's incredible. Anyway, moving right along, and this kind of goes into the whole crypto narrative, and what we've been talking about on this channel is that MasterCard had now started this crypto partner program with it, where everybody's cheering on. Everybody, oh my God, Ripple's involved in MasterCard, and this one's involved in MasterCard. Wow. Everybody's so excited, right? But effectively, what MasterCard is doing is extracting the value, the knowledge, the intel, the talent to create their own blockchain, guys. You think they're going to be, people are like, oh my God, they're going to use the XRP block. No, they're not. No, they are not using the XRP blockchain or Ledger or anything like that. Even Ripple's not using it, but they're cheering it on. Keep cheering, guys, as the price continues to drop. Anyway, most of my viewers, you guys are not cheering this on. You guys are like, oh, wow, this MasterCard partner program. Well, it's good for the integration of crypto and blockchain into TradFi, right? We know that MasterCard doesn't have plans to integrate XRP or Chainlink or anything like that. They're going to create their own blockchain similar to PayPal, similar to SoFi, similar to the one that we always talk about. Now it's losing my memory on it. But anyway, you guys kind of get the point. So why Circle? Oh, JP Morgan chain. There we go. Why Circle thinks the next phase of crypto will be about payments, not speculation. Well, we don't have to read through this article that MasterCard published because we already know the reason. The next phase of crypto is going to be about payments, not speculation, because that's what Circle does. Stable coins are for payments. Bitcoin was going to be for payments, but as we heard from ARK Invest's Kathy Wood, right? The stable coins are taking that market share away from what they thought Bitcoin could be used for with micropayments, because nobody's using Bitcoin for micropayments. They're using stable coins for micropayments. And this is going to continue to expand. And so then what do people need Bitcoin for? Anyway, you guys kind of get the point. And by the way, the narrative continues to play out. Core Scientific sold $175 million in Bitcoin as their AI pivot accelerates. And as I explained, once the first company starts selling Bitcoin, they're all going to do it. And they have been doing it. And we're not at the bottom of the market until they're done selling, and maybe even continue to sell at the bottom of the market, because this is the same thing the Bitcoin mining companies did in the previous cycle. But this cycle, they all want to get AI data centers built, and so they want that money to go build the data centers at all-time record high valuations and prices and costs for the chips and the machines and the servers and all of that. And so they're kind of these AI pivot companies, while the money is flowing right now, as we see with Iron. There's a lot of concerns involved. And by the way, they have to keep raising money to actually keep funding the growth and the development. And so that is a huge strain on the stock and on the growth of these companies that are pivoting to AI. But again, people are like, no, but Cryptoviser, this is the bull market. This is the bull market. I'm like, okay. I don't know what charts you've been looking at. But anyway, now we are hearing that Ripple has kicked off their equity share buyback from early investors. Basically, Ripple, not XRP, right? I'm not talking about XRP, because there's going to be people on that say, oh, Cryptoviser, thank you for talking about XRP. It's like I was literally talking about Ripple. But their mindset is that Ripple is XRP, and it's not. And even Ripple says that it's not, but they still think that it is. That's who we're trading against. That's the part of the cycle that we're at. But anyway, so basically they're buying $750 million back of their shares from early investors. This user, Chainlink God on X, 188,000 followers, said Ripple is doing stock buybacks of Ripple Labs shares, presumably using capital obtained from XRP sales. By the way, this is not presumably, they are. I mean, I just showed this in a previous video. I don't remember, it was February or March. We saw that they got 1 billion XRP from escrow, and they returned 700 million of it. That means they sold 300 million XRP that they received in that 1 month. And if the price was around $1.40, $1.50, we'll just say $1.40, that's $420 million that they sold of XRP on the open market, by the way. That's more than half of this buyback. And so it's not presumably, like, that's what they're doing, right? Anyway, he says, never seen a more prominent example of the token versus equity problem plaguing the crypto industry. But I'm sure XRP retail will explain how this is good for their bags, actually. And they are. The XRP army is saying that this is the best thing. This is the best thing for XRP. This user said it's disgusting, to be quite frank. They manipulate XRP holders into thinking things Ripple do will benefit XRP holders, tricking them into buying the token. Exactly. I mean, just going back to the MasterCard thing, the MasterCard crypto program, everybody was cheering on, wow, Ripple got invited into the MasterCard crypto program. This is great for XRP. It's like, whoa, what? They said Ripple got integrated, not XRP. But the XRP army, they see XRP. And this is a rug pull, guys. This is a 100% rug pull. when in reality, they dump XRP printed out of thin air and use the proceeds to buy back their Ripple's own shares. And that is exactly what's going on. And then we see things like this. Hedera's HBAR integrates USTO, a stablecoin, via Layer 0 to bring omni-chain stablecoin liquidity and cross-chain dollar movements. That's not what is going on here in my view. Let me explain what is. So going back to the XRP thing, right? Oh, well, MasterCard's integrating XRP. No, they're integrating Ripple. And why are they integrating Ripple? Because they want all the information on what Ripple does, how they do it, how they built their chain, because they want to build their own. And so we have already heard from Layer 0 effectively. It's Layer 0, not Layer 1, not Layer 2, Layer 0, meaning Layer 0 is better than everything else. That's the mindset, it seems. And so Layer 0 kind of allowing the integration of Hedera, this is just to extract value. Like, that's all it's doing. MasterCard is extracting value. Circle, the stable coins, are extracting value. Maybe not intentionally, like in a, like, I want you to lose money type of way, but they're extracting value from the Bitcoin ecosystem, from the Ethereum ecosystem, from the Layer 2 ecosystem by putting stable coins into payments versus utilizing these crypto payment rails that are already created. And there's reasons why they do this. I understand why they do it, but that is the point here, guys. They're not integrating because Hedera is the most interoperated blockchain. Look at these blockchains that nobody uses, Hedera, that are connecting to these newer blockchains that are promising the world, and look at where the valuations go. It extracts from Hedera into Layer 0. And so in that case, Hedera, it's probably bad for the coin. Moving right along, talking about value extraction, Ethereum Foundation has now published a mandate outlining its role as one of many stewards of the network. So what is going on here? The Ethereum Foundation published a new mandate outlining the organization's mission to reaffirm the principles it should guide Ethereum's long-term development. So yada yada. According to the foundation, the properties are central to protecting Ethereum's core goal of enabling user self-sovereignty, allowing people to control their assets, identities, and online activity without relying on centralized intermediaries. Ethereum must, above all, remain censorship resistance, open source, private, and secure, according to them. Without them, we have nothing. It also outlines how the Ethereum Foundation sees its role in the ETH ecosystem, rather than acting as a governing authority over Ethereum. The organization described itself as a steward responsible for helping preserve the protocol's core principles, saying, quote, "The Ethereum Foundation is not Ethereum's parent, ruler, or final authority. Our role is stewardship. We were Ethereum's first steward, now we're one of many, and when we are gone, we hope the principles here will continue on without us." And I would agree, guys. This is the issue in a lot of these crypto ecosystems that we've talked about this, is that the fact that when you buy the coin, a lot of people have the mindset that this is like a stock, right? Because if you buy a stock, the company's executives, they have a fiduciary responsibility to try to get that stock price higher, increase valuations, make the investors happy, right? That is their responsibility. But in a crypto ecosystem, people think that the foundations, that the founders, they have that responsibility, and they don't. It's the community, it's the ecosystem, it's the users, it's the developers. And this is a huge issue that crypto is in right now, where everybody's like, oh, well, our blockchain's the best, our blockchain's the best. It's like, but are you gaining not just users, but developers who are developing things that people actually need and want and use? And the answer is not whether they say the answer is yes or no. The answer is whether people are actually adopting the technology. For example, nobody is using smart contracts. And so when you buy Bitcoin, you're like, oh, they're going to use it for payments. No, they're not. They're using stable coins. Oh, I'm using Ethereum. They're going to integrate with TradFi. Yeah, but just to extract value from Ethereum. And that's exactly what we've been seeing going on here. And so this is everybody's responsibility to be part of the building. And if you don't build, there's no valuation going higher. Huge disconnect. Same thing with Ripple versus XRP. Two separate products, two separate companies, two separate things. But the people who are buying the coin You can tell them a million times they're two separate things, and they're like, no, Ripple has payment rails. Ripple is getting banking charters. This is good for XRP. It's like, how? When they're not even using it. Anyway, moving right along to MicroStrategy being called a Ponzi. Now, as I explained, I don't think that MicroStrategy is a Ponzi, right? They do have like a situation with their whole, stretch, stride, strike, strife, how they're paying the dividends, selling one asset to gain the money for the other one, to pay the dividends, but it's all coming from the same bucket of money. There's a lot of questions around MicroStrategy and their thesis. I'm not as worried about MicroStrategy as I am with the other Bitcoin treasury companies. And let me explain why. Because I think that MicroStrategy has the capital and the backing and the time in the market that they're going to be all right, okay, through the next bear market that we're in or approaching or whatever. But the other companies are copying what they're doing. This is the issue, and a lot of them are doing it, right? Strive is starting to do these perpetual and these preferred shares. But anyway, this is a long article about why this user believes that MicroStrategy is this. He says, the first time someone explained MicroStrategy's Bitcoin flywheel to me, I had one thought. This is a Terra Luna with extra steps. And to be honest, I wasn't wrong to think that. The surface looks the same. Issue a token or debt, buy a volatile asset, Bitcoin. Asset goes up, Bitcoin goes up. Issue more, which is what they've been doing, and repeat until it doesn't work. Terra Luna did this. Strategy is doing this, and Luna collapsed to zero in 72 hours, wiping out $40 billion. He says, so when I see Strategy sitting on 738,000 Bitcoin funded by 8.2 billion in convertible debt, my first instinct is we've seen this movie before. But then I actually look at the mechanics, not the vibes, not the crypto Twitter hot takes, not Peter Schiff's Twitter rants, the actual structural mechanics. And that's where the comparison falls apart completely. Let me show you exactly where. Now, we're going to go through this on a separate video, so make sure you guys are subscribed. That way you don't miss that video. But generally speaking, I mean, you guys kind of get the point, right? I mean, Michael Saylor described MicroStrategy according to Teddy Bitcoins when trying to explain what a Ponzi is, excluding the promise of returns. And so effectively, Boris Johnson posted on X. This is the former prime minister of the UK. He said, I've long suspected Bitcoin is a giant Ponzi, and now I'm hearing tales of woe that make me fear I'm right. Now, Michael Saylor responded saying, Bitcoin is not a Ponzi scheme. A Ponzi requires a central operator promising returns and paying early investors with funds from later ones. Bitcoin has no issuer, no promoter, and no guaranteed return, just an open, decentralized monetary network driven by code and market demand. And so people are all over Twitter and X and basically saying, well, he's describing what MicroStrategy is and is doing. And that brings us to Stretch, which is one of their preferred products that we've talked about before with, at this point, let's see, an 11.5% annual dividend. Now, we've been talking about Stretch a lot, and this user, ICO Beast, who is a merchant of narratives and building Kalshi crypto, said, so wait, what's stopping me from remortgaging my home at 5.8% interest and aping it all into Stretch for 11.5% returns in perpetuity? Well, you can lose everything. And this is the part of the cycle that we start to see this kind of thing. Now, I don't think ICO Beast is really talking about doing this. I think this is satire. I could be wrong. But effectively, this is what we started to see at in the middle of March. So in the middle of March, Strategy has the dividend date for record, meaning if you're holding the share of the stock or whatever it is, also called the ex-dividend date, if you're holding that on that specific day, then you get the dividend, regardless of whether you own the share when the dividend is paid out. And so on the 15th of the month is when they have the record date, and then at the 30th of the month is when they pay the 11.5% divided by 12. You guys kind of get the point, the dividend. And so what we saw was massive volume on Stretch in the week leading up to the to the dividend. I mean, you can see in the week leading up how much more volume there was. There was a lot more volume. In the average volume down here, this was on 700, 800% on a few days before the actual dividend record date. And so people were saying, wow, this is great. MicroStrategy is going to be able to raise a lot of money to then go buy Bitcoin, which is true. That's probably what they have done. And by the time you're watching this video, you already know how much Bitcoin they bought. It's probably going to be a very large amount. But the issue is MicroStrategy is the only buyer right now in the market, the only big buyer. Okay, people are going to say the ETFs, not true. There's really no other big buyer besides MicroStrategy currently. And because there was all of this push to get Stretch sold before the ex-dividend date and people buying it before the ex-dividend date, well, they were able to raise a lot of money. But now, what if they aren't able to raise the same amount of money next week or the week after or the week after that? What is that going to do to the price of Bitcoin? Because if they're the ones holding the price of Bitcoin up, all of these little jumps that we see in the price of Bitcoin, these little jumps, that's why we see all this resistance at these levels. And that's why the resistance is so clear. Because you have these events, look at this, January 15th. So that's when Stretch's previous dividend was getting paid, right? So you see a rise leading up to January 15th. And then right after January 15th, which was the dividend ex-dividend date for January, you can see here, January 15th was the record date in January for Stretch. And you could see on the chart very clearly, January 15th, a lead up in Bitcoin because they were selling Stretch to raise cash to buy Bitcoin. So that's what they were doing. They were able to buy Bitcoin. And then once the ex-dividend date passed, boom, straight down. And so that's exactly what we're kind of seeing here as well. We're kind of seeing this kind of double, triple top right here at the $72, $74, $5,000 level. We could go higher than it. But again, MicroStrategy is really the only major buyer in the markets right now. And they were buying most of the Bitcoin with Stretch, people buying Stretch. But I don't know. I think that this is a huge risk in the market. So let me know what you guys think about that, because I don't even think any other channel is showing you this chart or showing you the kind of the relation between what they're doing with Bitcoin and what they're doing with Stretch. And then this user on X said this. He said, Jack Mallers, how about Strike integrates Strike in the app? Now, Strike is another dividend product by MicroStrategy. So this user is stating that Strike should integrate Strike in their app, Jack Mallers' app, and that Jack Mallers' app should park the money in Strike, and then Strike takes 2 or 3% spread and then gives 9% on the checking account for Strike. That would get you many new customers, this person says. But here's the deal to this user, Dr. Wealth. Why would somebody go and hold their money in a risky product on an app that's supposed to protect your money instead of just buying Strike yourself and not having that risk? Strike, the app, is basically a financial product. They can't park your money in risky assets like that, guys. That's what FTX did. That's what Voyager did. That's what Celsius did. That's what BlockFi did. That's why they went down. Because they traded customer funds and then they lost it. And then they doubled down with more customer funds and lost it. And then offered more yield to get more customer funds, try to win the money back, and they lost it. But that's part of the cycle that we're at. Meanwhile, a crypto investor turned $50 million into $36,000 in one botched move. And that botched move happened on Aave. So the founder of Aave, Stani Kulichov, said earlier today a user attempted to buy Aave using $50 million of Tether through the Aave interface. Given the unusually large size in the single order, the Aave interface, like most trading interfaces, warned the user about slippage, which is a change in price due to the purchase, and required confirmation via a checkbox. The user confirmed the warning on their device and proceeded with the swap, accepting the high slippage, which ultimately resulted in receiving only 324 Aave in return for $50 million. Now, obviously, it sucks, and they're trying to figure out who the customer is to get them some of their money back. But I think the bigger point is When there's such slippage like that, that means there's no liquidity in the market. There's no liquidity in crypto right now. And the only liquidity that is in crypto is the shit liquidity from retail investors who don't understand the difference between Ripple and XRP, who don't understand the difference between a bull market and a bear market. They just think that everything goes up forever. That doesn't understand buying the top of the market doesn't mean that the price is going to keep going higher just because that's when you purchased it at. Like, they don't understand any of this. And by the way, the data proves what I am saying. Going back to Jim Chanos's information from Robinhood customer losing 5%, they don't even understand what's going on here. And so they're investing in everything that all the YouTubers say, buy this now, buy this now. Wall Street Bets is saying GameStop, GameStop, GameStop. Maybe GameStop's going to be a good deal. Maybe it's not. I don't know. But maybe Stretch will be a good deal. But remortgaging your house to get more Stretch, taking a financial product that's supposed to protect your money in money market funds while you're holding it there and saying, just put it in Strike, one of MicroStrategy's preferred products. Instead of you doing that, you want them to do that with all the customer funds and risk all of the customers just so you can get 9% instead of doing it yourself. This is where we are at in the cycle. And in my view, people who watch my videos, you guys are winning. 100% winning, and we're going to keep winning in this market. And why? Well, we understand how the markets work. We understand that the market is going to keep dropping until we see capitulation. And the capitulation is not going to come, I think, until we see collapses, whether it's of cryptos, crypto firms, ETFs, Bitcoin treasury companies. There has to be collapses or liquidations or consolidations or buyouts. And we've already seen buyouts, by the way. I mean, Strive just bought Semler Scientific, which is another Bitcoin treasury company. That was an acquisition. I mean, and then look at Strive's stock price. It's going down. Maybe Strive is going to have to be acquired as well. Once the second one gets acquired, it's kind of like the Voyager, Celsius, Terra Luna, BlockFi kind of domino effect where, yeah, that's going to lead us to lower prices in the overall market. And so I'm not buying yet. I don't know whether I'm going to be buying at all in 2026 or ever in crypto ever, to be honest. But definitely 2026 seems like maybe just a trading year until we get confirmation of the actual market bottom. See you guys in the next video. Let me know your thoughts down below in the comments and give this video a thumbs up. Hit that subscribe button. That way you never miss a new video we upload every single day of the year. I'll see you guys in the next one. Thanks for watching.